Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 18th of August 2021. And we're producing our gold and silver morning update and price forecast. Yesterday, we saw really poor retail sales figures coming out of the United States, but good production figures. Gold and silver prices are vacillating, and we take a look at some of the headlines and what else we should watch out for this week. So let's go and take that look. Welcome to Illuminati Silver. It's Wednesday, 18th of August, 9:18 a.m. GMT +1. Overcast and dull. That's not your host, or hopefully not your host, but it's the weather outside. And perhaps to some degree, the news too. Headline, Taliban ring Kabul airport with checkpoints. Taliban ring Kabul airport with checkpoints. A lot of stuff going on there and a lot of criticism being levied against the Biden administration. But we're not void of it here in the UK either, because Boris Johnson faces Tory backlash on Afghanistan after recalling members of Parliament. What caught our eye in the news today was this. Junior bankers have seized the upper hand on Wall Street for now, with potential recruits balking at 100 plus hours weeks. Banks are raising salaries in a race to attract talent. At first, Goldman Sachs Inc. executives watched with puzzled detachment. One competitor after another was bumping up pay for junior bankers, the entry-level grunts who can churn out 100 plus hours weeks, trying to get their footing in the business. But as the raises kept spreading, Goldman managers grew agitated. One senior executive groused that rivals were using gimmicks to gain an edge in recruiting because they lacked the prestige of Wall Street's premier investment banking franchise. Gimmick or not, in the span of a few months, the sticker price for a freshly minted college graduate in top-level banking has quickly shot up, reaching and then surpassing $100,000. A guaranteed salary to be padded later with a chunky bonus. Ultimately, even Goldman caved, an acknowledgement that its name alone was not enough to ensure top candidates would welcome its lukewarm embrace. So no matter how much one may hate the banks, if you've got kids or grandkids looking for a career, if you want them to be wealthy, join a bank. I think back to my early banking days, and my first take-home pay, albeit it was a while ago, for a month was £220. Today's rate, that would be approximately $286 for the month. And these guys are getting $100,000 a year. And they're complaining because they have to work 100 hours. I'm saying no more. I didn't put 100 hours in, but I certainly put in 80. Would I swap that now if I was young? You bet I would. Okay. UK inflation posts a temporary slowdown on its way to 4%. Now this is relevant because although it's akin to the UK, one has to ask, is this going to happen in the United States as well and in the rest of the Western world? UK inflation eased in July in what is widely seen as a blip on its way to double the Bank of England's target this year. Consumer prices fell back to the 2% goal for the first time since April, easing from a 2.5% increase in June. The Office for National Statistics said on Wednesday, which is today, it's the first time in 4 months that inflation rose less than economists had expected. The slowdown partly reflects a sharp rise in prices in July last year, when some of the restrictions deployed during the first coronavirus lockdown were eased. With the economy mostly reopened except for overseas travel, inflation is expected to accelerate quickly, driven largely by the cost of energy and shortages of both goods and labour. The Bank of England plans to reduce its stimulus to ease pressure on prices. We expect inflation to accelerate further during the rest of this year, rising significantly above the Bank of England's 2% target as supply chains remain under strain, faced with a strong rebound in demand. So there we have it. Although UK inflation's gone down, the expectation is for it to go back up again. What does this mean in terms of raising rates? Well, it brings the potentiality of rates rising sooner to the fore, but certainly, whilst we still think that's some way off, it's certainly likely to reduce the level of financial stimulus that's being put into our economy. BBC News. Here we go. Price rises cool amid clothes and shoe discount. US left too quickly, says Afghanistan bank governor. Qantas says all employees must have COVID vaccines. And Nando's shuts restaurants as it runs short of food. Obviously deliveries being the issue. In the United States, of course, 3 ways this crisis really hurts Biden. US labs stand on threshold of key fusion goal. Fusion research, like artificial intelligence, is the future. Very well worth looking into that. We haven't got time here, unfortunately. Let's look at the financials. Dollar down a little, just a touch, but is over 93 points. So down today, but rose yesterday. We said it would hit 93 again. It has. Whatever you hear on the YouTube about the dollar crashing, forget it. Other countries' currencies will crash first before the dollar. And when their currencies are crashing, what do they do with their money? They move it into the dollar, which strengthens it further. Anyone who tells you differently is either economically thick or deliberately trying to deceive you. Now, will that be the case forever? No, it won't. But in our short proximity of a couple of years, do not envisage the dollar crashing way below all the other currencies. The only currency at this moment, arguably serious currency of significance, that will ever be able to hold up again now against the dollar, you have two. You have the yuan, but frankly the yuan has its own problems, and you have the euro, and the euro has its own problems. Swiss francs, great investment, but it's too small globally. But in terms of world currencies, the battle is between essentially, not even sterling is that involved, and we wish it would be coming from the UK. It's euro, yuan, dollar. Or Bitcoin. I just did that to annoy those who hate cryptocurrencies. Right, oil and gas. WTI crude, $66.93. Brent crude, $69.45. Marginally up, reversing the $0.50 they fell yesterday. Stocks, well, on Wall Street, the markets were down. But again, under 1%. We do not see that as significant, quite frankly. Asia overnight, slightly mixed bag, but broadly up, half a percent. And what time is it now? It's 9:26. The market's been open for a short time. And we see the Euro stocks market down 0.1, FTSE down 0.1. Again, nothing too great in either direction. If they were up that amount, it's not of great significance. But a little bit of pressure pushing down. Now, the economic data is something we do want to cover. The Empire State Manufacturing Index on Monday was appalling, and we mentioned that yesterday. But this is also now being reflected in retail sales as well. Retail sales down 1.1%. The markets were expecting down 0.3%. So very, very significantly lower. Retail sales excluding automobiles down 0.4%. On the positive side, industrial production is up 0.9%, almost doubling median forecasts. Capacity utilization is slightly up, and business inventory is also slightly up. The NAHB Home Buyers Builders Index, though, is down. Now, we didn't actually listen to Fed Chair Jerome Powell's comments yesterday, so it would be difficult for me to remark on them this morning, but I will take a look at them later today. But the overall picture is, frankly, a mixed bag, really. You've got, to some degree, production up, but at the same time retail sales down. They had strengthened the month before compared with what they were the month before that. So we need another set of data before perhaps we can say there is a trend developing. What's happened to the gold price? Well, gold, I'll refresh the page because we put these up about 20 minutes before. Gold over the last 24 hours is down $5.69. Now, if we look at gold since the start of the week, we can see that it is actually up on Friday's close, which was $17.79. So it's up $9 since last Friday. It's up $54 this time last week. That's a literal 7-day difference. But so gold is edging up and trying to get close to that $1,800 level. Hasn't quite made it yet. Silver, though, disappointing, because silver is caught slightly. Silver's down 14 cents at the moment. Let me refresh the page in case it has changed. Yes, it has. It's down 16 cents. Now, if we look at how it stood on last Friday's close, or if you like before Monday's opening, it was 23.77, exactly the same now as it was then. Silver dipped initially, then rose yesterday, hitting its week's high, but we're only the third day into the week, but nevertheless actually went as high as 23.98, trying to touch that 24 level, like gold's trying to hit that 18, silver's trying to hit 24, but has fallen back, recovered a bit, fallen back. The economic news today, Wednesday, are building permits and housing starts. But what will have more bearing today will be the FOMC minutes. And any comment, and he is quite outspoken, St. Louis Fed President James Bullard, what he may have to say. But our eyes will be on the jobless claims tomorrow. But you never know, something may come out here. So, silver toing and froing, holding its own at the moment, not crashing to last week's lows, thank goodness. But still, we just cannot totally ignore the fact that whenever it's making gains, it's getting pulled back. Partly because if the economic recovery is not robust, and this is where silver is affected in two ways, if the economic recovery is robust, then silver benefits from industrial demand. And therefore, if it's not robust, it suffers from industrial demand. But if the economic growth is not robust, then we have more stimulus being pumped into the economy, therefore acting as a tailwind from a monetary point of view for gold and silver. And these are the difficult balances that have to be equated and valued and evaluated for some on a minute-by-minute basis. That's for what I call day traders, and for others, for economists, on a longer time frame. But just remember, one of the biggest markets in the world, you've got the debt market and you've got the foreign currency market. And therefore these things have a bearing. Cryptocurrencies took a hit over the last 24 hours, down 3.78%. We were over $2 trillion market cap. We're now at 1.91. Will that recover? We believe so. We believe by the end of the month it'll be back over 2 trillion. Let's see if we're right. That's it for now. Lots of news going on geopolitically, fair bit economically. Keep safe, keep well. Please give us a thumbs up, subscribe, press the bell sign. Have a great day. Until we speak tomorrow. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.